Hey guys, Marty Boots here. Today I want to make an educational video for you all on price action, and this is a golden nugget that I have learned from staring at the charts for about 13 years. You know, there probably hasn't been a day in 13 years when I've not had a look at charts, to be honest. But you pick up these things with experience and with chart time, and that comes with thousands and thousands and thousands of hours on staring at charts. So this is a golden nugget, guys, and you will not learn this from any other group, in my opinion. And no matter, I don't even think you learn this from different paid groups or anything. So I would advise you all to maybe appreciate it and actually study it, because it takes practice in certain scenarios, but sometimes it's very simple, and it allows you to read the chart a little bit better and understand price action better. So without further ado, I'll get into it. And this was a pretty simple example. Don't mind this arrow here. That's just to remind me about something. But you can see the bottom candle in any move is the most important candle that you need to be looking at for future price action. Now it doesn't always give the signal, but there's a high majority of the times it does. This arrow, sorry, this arrow is in the wrong place. Whatever I done there, but you can see here, you need to draw a line on the body of the bottom candle, right on the bottom of the bottom candle, and this will be your support and resistance. You can see it come down here, support, bounce, especially the first time. You can see it touched again. Then we broke through it. It was resistance, 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 and then we finally broke out above it. We use it as support, and off we went. It's just vitally important. Your line has to be on the bottom candle and come straight across from that. So that will give you the resistance. Now you can see price fell back down here again. I'll just show you how important this is. You can see price fell down here, and look where price look at this bottom candle. Let me zoom in on this just to refine this down. Oh fuck, pardon my French, guys, but sometimes when I've got too much open, the computer's going a bit slower. You can see here now, this is your bottom candle. You can see here, this is your bottom candle. Look at this. This is the bottom candle. You draw your line there. Now you can see price tried to get above, and failed. We finally got above this. This is your bottom candle. This is your support and your resistance. Your line on top of this. You put your line there. You can see we broke above. We even back tested. Why did we back test this area? We back tested because of this candle. And then we moved higher. What happened again? We back tested exactly to the highs of the candle, and price went higher. Now this is a weekly time frame, so it's nothing to be sniffed at. I mean, you can do this on a 1 minute chart, 5 minute chart, 10 minute chart, daily chart, monthly chart, weekly chart. It does not matter. Yearly chart. This is price action trading, guys, and price action is key. And price action is better than any indicators. And don't get me wrong, indicators are fantastic and a good addition, but people need to have a base understanding of how price action works, and then you can use everything, I don't know, synergistically together, if you want to put that word on it, and improve your trading. So that's just the first example. I've got loads of examples here and different examples, but you can see here in BAT, this is a 3 minute chart today. Today and yesterday, whatever. You can see the bottom candle here. This is a big move higher, and you can see the pullback in a bull trend. You can see this pullback. This is your bottom candle. I've drew the yellow line on the bottom candle, and you can see the yellow line all here. we pulled right back into that. Why did we pull back into this area? Because this is our bottoming candle, and you know we've seen it holding here. You can see this holding. You can look to buy in this area with low stops or small stops if you want to. If you're day trading and stuff, you can look for that rejection. You know, the rejection of it. You see this big green candle or whatever, you can look to buy, maybe have your stop below. That is one strategy. Now it's good to have more indicators or different things as confluence. You know, you've got your 50 moving average here. This is a 3-minute chart, but you can also move up to a 10-minute chart and find other factors to cement that this is a good level. But anyway, you can see price moves higher, and we come back down, and I've drew this purple line because this is the line of this dip. Now this is not the major support, this is like a secondary support because it is the bottom candle of this dip. You don't know it at the time, but when you get up here you will know it. So when you see price fall back down into this level, you have got these two supports in this area, and it is a good buying zone. And you can see what happened obviously, and price moved higher and just continued to move higher from that level. Now it also works as looking for sales. I mean, you can see when price breaks down, I've got this actually slightly, you know, when you see price, now you're not going to be able to take that sale right now, but you can also, you can run that out. If you get a major level, I mean, you can run this out, and you can see here that this level is actually acting as resistance right now. Price got above it and it failed. I mean, you could look for a short for here, for example, but it didn't really play out in this circumstances. You know, but I'm just giving you an example there. This is just me live doing this. But you can see here on this dip as well, you can see here this green candle is your bottoming candle, and you can see here price, because the trend is up, so you're not looking for shorts. Sorry, I should have mentioned that. You know, you could have been looking for shorts here, but you're fighting the trend. If this level came back below this, you could look for a short here with a stop above the highs, but you're fighting the trend. So it's not ideal, but that is a scenario where you could use this. But anyway, back to this one. You can see here the level held again. You can see this is the low. Price got above it. We came back down. We retested this area. You get above this line, you can go long right here and have a stop right below here, and price goes higher. And you don't need any indicators or anything. You don't even need moving averages on your chart. Moving averages on your chart are just to help, just a guideline. Obviously you can see the trend is up. Here is another thing. We've got two lines, guys. I just picked some random charts and looked for examples. I didn't really look deep into this. If you practice this strategy and look on all different charts, and you will find this everywhere. Now I honestly just picked a few random charts, so I just used what was on the charts, to be honest. Here is another example here, and you can see the bottoming candle. We got above that. The next one, you could have looked to buy here on a rejection of that level. Look how perfect this is, and look at Wabe here, and look at it held again, and it couldn't get down there again, and then it started on an uptrend. I mean, we all know how much Wabe has went higher. I mean, it's 300% higher or whatever that was. Well, you know, you're not going to call it top probably, but yeah, the potential is there. But look how important this is. Put your line on the bottoming candle. Now, how do you know when the bottoming candle is? You don't know until after the fact. But when you get this move higher, then you put your line here, and this will give you a look for a second entry. This would be your first entry, but you'd be guessing, then you'd be going long on the break of this candle, or you maybe on a smaller time frame you could have got in, because this is a weekly chart, guys. It can be used on any chart, but you go long here obviously, and maybe put your, you know, if you could put your stop down here, but there's, you know, that's a big risk. Sorry, if you're going like that, that's a big risk. See how small that is. There's 30%, 25%. It's huge risk. But so when you have your line here, you go down into a daily, an hourly chart, and I could do it right now, but the video will be too long. Just break it down into a daily and hourly chart, and you can see price getting above this, and you can find an entry when price gets above this, and have a nice stop below. Work on your own risk tolerance depending on your size of your trade and how much of your account you're putting on. So you can see here again, it just went higher. Now here is the top. Look at this. Look at this top. Huge, big, massive, whatever you want to call it, candle, and it's your top and candle. Now you draw a line at the bottom of this, the purple line. Look what happened. Price came right back down, failed to break below it. As soon as this gets above it, you can buy and have your stop below the low. And you can see here, I mean, you know, it's nothing to be sniffed at. Look at this, it's 80% move higher. This strategy, guys, is unbelievable, and it takes a little bit of refining, a little bit of practice. Here's a bottoming candle right here. You know, sometimes there is chop. I'll just go. I just see this now, guys. I'm all doing this live, but there is a lot of chop, obviously. But when you get above it, you think it should go. You should go long. This is a weekly chart, so you don't trade off this. You just have your line there and break it down into smaller time frames, unless you're an investor, maybe. But you can see when it finally broke above, it went higher, and you can see here when it broke. You can see this. Look at this. Look at this. Where did it touch? It came right down and touched this level. You could have got a good trade off that. That's probably a 50% bounce, 30% bounce, 30 to 50% bounce, yeah. And you can see again, price broke it. We back tested the level, back tested this important level. This is the most important level. We back tested, and price rollover. And where did it go? You would be weary here when you see this happening. You'd be weary that maybe the lows are getting taken out. So it's a good level to short. Even though you're down almost on the all-time lows, you can be looking to short this. And you know, look where it went. Alright guys, this is a longer video than I thought, but I'm just trying to explain it pretty well. I've not even looked at these charts. Well, here you go again. Like, look at the level. This is the main low of this downtrend, and you can see what happened. You have your line here. It got respected here massively. The line broke. The likelihood of you going to new lows is probably, you know, I'm not going to say 100%, but you can see here breaking the moving averages and everything else. You're breaking down, bearish consolidation on the moving averages. You know, you're going lower. But when you see this line broke, you need to be wary, and you probably need to be short until you get back above that line. Then you'd want to be going long. So you can see here again what happened. Where did we get rejected on ETH? Massively important. It's no coincidence, guys, that we got rejected right at this level. It's just no coincidence. Now you can obviously see price never got back down here to give us a level to go long off. Sometimes that happens. You know, that's just trading. You don't get the signal on every chart. You know, if price ever gets down here, you need to be watching it, because these are small candles, so it'll be a double bottom. I'll just delete that just to not keep it all mixed up. Now I've put this wine, whatever color, purple line there. You can see the topping candle. Look at the topping candle. I move this mouse out of the way, and you can see where did it get respected at. Where was the respect? It was respected right into this topping candle. Your line at the base of it, and what happened? Price dropped. Price came right back up into the exact level, and where did we go? It dropped lower. Guys, it's very simple, and this will help you all improve your trading by I'm not going to say tenfold, but you can see the drop there. It'll improve your understanding of charts, and there's so many little golden nuggets like this that you understand and pick up after years and hundreds of thousands of hours staring at charts. And it's stuff like this that can change your game, and it needs practice. You got to remember them, remember to do it, so it's set in your brain, you know, so it's second nature. So you can see here again, this is the low. It bounces here, you know, and it gets respected. You know, prices breaks below, it's still respected, fails, respected again, fails, and again, because this is a major low, you know, so you can see how important it is. Respected, respected, even back into here, it's still respected. Um, you know, if you had your candle right on, or your line right on the lows here, it didn't give you that entry from that, but I mean, you can use lots of different strategies on that. It looks like a fallen wedge to me. That's like I use 10 to 15 different things in my trading every single day. I don't just use that strategy. Like, I mean, I would probably put, you know, a wedge on that to gauge it. It'll gauge the trend line. You can see it coming off it. That's an example. You see yourself breaking above moving averages. But this is a daily chart, so you refine that down to a 4-hour chart, and you'll get an even sharper entry. Where am I at now? Okay, you can see after a bullish move higher, I probably should have done one here as well. You can see the low after the low. Sorry, just zoom in a little bit here. And this is a longer video than I thought, but I'm just emphasizing the importance. So there is the highs here. First candle, roughly. It's pretty rough there. It's probably not right. It needs to come down a bit. But anyway, it doesn't really matter. You can see it was respected. It came down into that level. It was tested here. It was tested. It came down. It was tested, and price went higher. You can see here on this uptrend, a line on the first candle, on the low candle. What happened? Price came down, and it was tested. It's tested, and it was a buyer, and it went higher. So you don't have your buy on the lows of the candle, or you don't have your trend line on the lows of the candle. It's the top of the body of the first low, or the lowest candle. Again, this or this, it's a bit of a double bottom there, triple bottom, I don't know, but anyway, both are pretty similar here. So you can see, yeah, it's probably that. You can see as we retested, we got above it. You can see there was a move higher after it was retested. It also, let me just see, well, you can see here when we got above the level, but that's not a great signal. I think I had something else I was looking at here. This is when I should have maybe done the research even better. Well, this is your low anyway. This is your lowest candle. You break above it, when you break down below it again, obviously you're looking to be short here. What is this? Litecoin BTC. This is choppy action. It's tough to do it there. I mean, yeah, okay. Well, there is a trade. There is trades off it. You can see it was respected. See the wick here. It was respected, and it came up. There was this fake out, but it got above it again and went higher. Now again, I'll move on. That's a choppy chart, but anyway, it doesn't really matter. Here is a high. This is just an important thing to note. Also, this is the high, and it's an important high. You can see it's probably the first. I mean, it's a higher high. It's not the first higher high, but it's a higher high, and it's a major high coming off the bottom. So I put a line here, and you can see how well it was respected. It's all respected throughout here. Price breaks above, it's respected, respected, respected. Price breaks below. Price breaks above it, it's respected. Kind of respected. Respected again here a couple of times, 3 or 4 times. Again, it came up into the level, didn't get above it. But here we broke above it, and we started holding the moving averages, and then finally price was able to get above it. And it's basically because of the level. If it really helps you to look where the exact support is or resistance. And you can see here, this is a defining resistance. Some people might have had it all over the place. And I am not telling you to just use one line as support or resistance, but it can help you define the main area, and it's pretty important. I'm just trying to figure out what I have drawn here. Why is that line there in the middle? Because it really should be. Oh yeah, sorry, it's the highs. That's what the arrow is for. Okay, so that is your high. That's your topping candle. Okay, well, this is your topping candle. Okay, so this is a different angle to look at that. So you put your line across the bottom of your topping candle. When you get below it, it is considered bearish, but you can see it's in an uptrend. It's got all moving averages, support and price. It's got 200 moving average just below. It's just broke out. You know, the trend is strong to the upside. So this is your topping candle. It's an important candle. It's a very important candle. Always note your topping and bottom candles. And you can see price broke down and it couldn't hold because it's in an uptrend. We got back above in this area because this is the topping candle. You can see how strong the support is off the base of the topping candle. And then what happened? I mean, price just skyrocketed higher. Very important. Maybe I should zoom this in. And you know, price skyrocketed higher. But note the support. Note the topping candle and the support of it, and where price went. And where did it come back to? It came back to perfectly into the topping candle bottom of the body. Unbelievable, guys. It's fascinating to see how this works. And away we went higher again. You know, so it's pretty important. Just to note here, if I move this up to our real topping candle now, you can see here what happened. You know, we respected, we did break below, but when we got above this again, because this is the topping candle, guys, remember, when price got above this, look what happened. Price just went way higher, and we came back and we were respecting it again. It's still, look at this candle 3 days ago, it's still respecting it. And this is the high, 29th of March, and over a month later, you can see price is still respecting it. It's not there's a reason it's respecting that level, guys, and this topping candle is it. Now here is today. This is WONT and WTC for an example. I just spotted this when I got back from a walk. I was out walking the dogs. So you can see here on a 1 hour chart on Walton was bottoming, and you can see here I drew the yellow line right on the top of the bottoming candle, and you can see it ran straight across. Now we did break out. There's usually going to be this choppy action around this level because it's an important level. And when we finally broke out, I mean, you could look to go long on this if you really wanted. But you can see here again today, Walton is up 2.5% at the moment. I think it was up 3.5% earlier. But you can see it came back down, respected the level perfectly. Now, if I was watching this, I could have tried to alert Walton, but it's better me teaching you guys. I mean, I can't be there every minute of the day, so you guys need to study this and understand this like the back of your hand, and it'll make you so much money. Believe me, it'll just make you a fortune of money over time. And you can see here, but the low risk entry, this is what traders need. We need low risk entries, and this can be used on any time frame. This just happens to be the hourly chart that I'm looking at here. So this is refined right down to the hourly chart. So the entry is very, very low risk. I mean, you see this getting back above the line. There's 0.45. We'll call it 0.5% for shits and giggles or whatever. But so that is another example, and that is just today. I just spotted that. I don't know why this is not dragging over. Here is your bottoming candle before. If you were looking for a trade off this is your bottoming candle. It's a huge early bottoming candle. So where's your line? If through this purple line here, price came right up into it. Now you can be pretty certain that this is a good area to be shorting. Now, it didn't pierce it. The perfect entry would have been a pierce of it, and then price would drop lower. It didn't, but it came up right just into it. And what happened? Price rolled over. Not that we can short Walton. It's just an example of how to use the bottoming candle. And this is the bottoming candle. So that's all the charts I have open, guys. 25 minutes here and whatever. But honestly, it can be one of the best 25 minutes of your life to understand these little trading golden nuggets that I have learned over the last 13 years, and I guarantee you will not learn this anywhere else. And it's one of these little golden nuggets that can, take you to the next level. So I hope you all appreciate it, and I will be dropping more educational material as we move forward. It's hard to fit them all in. So I hope you've enjoyed it, guys, and if you have any questions, it would be good if everybody would kind of practice it, and if you see any strategies setting up or any trades setting up or anything, post them in the chat, and we can all look at it, and we can trade off it and make more money together. Because I can't be there all the time, but if everybody masters this and posts it, we can work together and just be a killer team. So anyway, guys, that's it. 26 minutes. Thanks for watching, and I hope you enjoyed the video. Have a good day.